Introduction to Accounting, How to Record a Journal Entry, Analysis of a Transaction, Commerce Lecture Online, How to Record the Transaction, Goods sold by owner rupees 1,10,000. Goods means merchandise. If owner is selling merchandise, we use the word sales in accounting. Accounting is a language. Whenever owners sell goods or merchandise, it will be termed as sales. Now let's see a four-step analysis procedure. If we look at the two accounts involved or the accounts involved in this transaction, one account is sales. Because sales are made for cash, the other account involved is cash. Goods are sold by the owner and cash is received by him. So cash and sales are the accounts involved in this transaction. Now let's see what these two accounts are by nature. Sales by nature is an income account. Cash by nature is asset. If sales is income, whenever owner will sell the goods, his income will increase. So because of this transaction, his income is increasing. And according to rules of debit and credit, increase in income credit the account. If we look at the account of cash, cash by nature is asset. Whenever goods or merchandise is sold by owner, the cash will increase. He is selling the goods for cash. He is receiving cash. Therefore, his cash is increasing. Cash is an asset. Whenever asset increases, according to rules of debit and credit, it should be recorded in the debit side. Now, how to record this transaction in journal? Cash is coming in the business and asset is increasing. Therefore, cash will be recorded in debit column. Because sales are also increasing, sales by nature are income. Increase in income credit the account, therefore it will be recorded in the credit side. The date of this transaction is June 15. That will be recorded in the date column. Narration or explanation below this journal entry will be purchase goods for cash. Like, share, subscribe.